in August of 2015, the market had sold off. All of my indicators were bearish, except for this one relative sentiment indicator. And the market rallied 10% in a straight line. And I thought, oh, that's interesting. Fast forward another 6 months, market sold off 10% again. Everything was bearish in my indicator suite, except for relative sentiment. Market took off and didn't look back. And I was like, darn, it's not cool being on the wrong side of that. So I went and I looked, and it turned out that anytime momentum was negative, but institutions were buying the dip, market tended to have their best annualized returns. So when I learned that, I just started focusing on relative sentiment. I wrote a paper on it, sent that paper to Wes Gray at Alpha Architect. Um, and, he has a PhD from Chicago, studying under a Nobel Prize winner. He has sort of the pedigree to kind of critique what I had done. And I knew that I was making bold claims in the paper about market timing, factor timing. And he looked at it and he said, okay, well, you controlled for a lot of things, but did you control for X, Y, and Z? And these were some things that were sort of outside of the scope of what I had controlled for. I said, no. He goes, well, control for those. So I controlled for them. The results held up. He said, wow, this is interesting. It's not momentum, trend. It's not value. It's its own thing. You should launch it as an ETF. That was about 2018. I was working at an RIA. They had sort of, different interests. So I kind of put that on the back burner.